Hey guys, good morning everybody. Welcome to another edition of the AccessToTrader.com weekend wrap-up show. Hope everybody is doing great. First and foremost, I want to wish all the great dads out there, okay? And it's so important because a lot of us, well, not a lot of us, just a lot of men in general are so underappreciated that, it's really sometimes really nice to acknowledge real men who take care of their families, real men who take care of their kids. At the end of the day, anybody can be a father, but it takes a lot of effort and a lot of love to be a dad. So I want to congratulate all the dads out there. This is your day. Have a happy and just a relaxing day, and hopefully you are appreciated by your family. I'm kind of getting screwed today. Today is my daughter's birthday. That's right. She falls in right on Father's Day, so we are having a party today in my house. The only problem is nothing to do with me. It's all about my daughter, but it's okay. It's all good. It's all good. I love her a lot. And the most important thing is that we are all happy and all healthy, and everything else is just the cherry on top. So God bless you all. Have a great day. So let's get into the market. Again, another great point of markets just doesn't make a difference. They really don't dictate anymore on your individual success. You had the Dow Jones Industrial Average down a little bit under 1% this week, while the NASDAQ 100, or the NASDAQ Composite, excuse me, was up over 1% today, and 1% this week. And the most important part about that, again, we all go back to it, is your individual process. The one thing that I think is, again, very, very underappreciated and very underutilized, okay, is the 5-day moving average. Especially new traders, you should really really put the 5-day. I know a lot of people use the 8-day and whatever the case may be. I've been using the 5-day moving average kind of as a tracker for the indication of short-term market sentiment for many, many years. That's one constant. As long as I can remember trading, I've used the 5-day moving average. And if you look at the rise of the 5-day moving average, this is a chart of the Dow Jones Industrial Average, at least the diamonds. If you look at the 5-day moving average, it really represents short-term sentiment. And you saw what happened. We talked about this for all you guys who are just seeing the video on the weekend. This video goes out to all our members Monday through Thursday. So we started talking about a potential backtest of the Dow all the way, from like Tuesday. As soon as we close below the 5-day moving average, again, if you believe in the whole theory, and again, this is the whole backbone of the PS60 theory, if you believe in the whole theory of stocks go from supply to supply, well, they have to go from demand to demand. And we talked about this back test potentially coming all the way to the 10 and possibly even 20-day moving average this week. And that's exactly what happened. The problem is for all the the bears out there, nobody cared. Nobody really cared because number one, we've had such a big stellar run in the Dow Jones Industrial Average, in the Nasdaq, in the Russell, which by the way has been absolutely on fire. The IWM. So nobody even cared. I don't even think anybody even noticed, but just from a technical point, from the educational standpoint, guys, put in the 5-day moving average. Once an index or a stock closes below and the next day confirms, usually it's going to see that bias in that direction. So for all you guys who are not using it, again, it's not the 50-day, it's not the 100, it's not the 200-day moving average, but it does give a good glimpse of what's going to happen, or a high probability of what's going to happen in the next coming days. Just the 5-day, I think it gives you a good bias, at least a good thinking bias, a starting point where a directional point of a stock or an ETF or an index can be. So overall, pretty solid week. A couple of takes that I saw from this week. Number one, speculation money is tremendous, absolutely tremendous. Every single day we started seeing different rotations from Tesla. I mean, Tesla absolutely on fire. From Tesla to Netflix, that massive upgrade on Netflix shares. From Netflix having a big run, and then Nvidia had a big run, and then Roku had, Roku has days now that it goes on some significant runs. Then you had your, Spotify, which again, if you look at Pandora, which actually has been in a pretty decent run over the last couple of months. Not Spotify. I mean, not compared to Spotify. Spotify is going to be, is almost a $200 stock. So even that extraterrestrial radio cyberspace is hot as well. So you're seeing a lot of really good flow, right? A lot of really good flow. Obviously, Twitter's been hot. Square has been hot. Baidu has been hot. So you have all this really good flow. And just when you think, speculation money can't be, demonstrated better, here comes the IPOs, right? Here comes all these crazy IPOs throughout the week, and everybody, and that's when you know this market is very, very strong. Because when you have stocks like IQ just going ape, Pivotal, right? Pivotal. This stock AGMH, which is amazing. I had AGMH right here, literally right here. I had the stock right here on my watch list, and the stock opens up with a 30-cent spread, right? 30-cent spread. It literally trades like by appointment. And I was like, well, listen, this is just way too thin for me. I looked 2 days later, the stock goes to 35. Just absolutely crazy. Even a stock like CLPS, just to give you an idea, I bought the stock right here. Okay, I bought the stock right here, and I sold it around the $6 area, and I was happy, right? I was happy. I made like 40, 50 cents on the trade. I was like, listen, you make 10% on a small cap stock. I don't trade these small cap stocks anymore. So when I see kind of a stock coming out of a below average base, or excuse me, a lowest buys base, I'll get interested because at least I'm conscious of the theme. So I bought the stock, I sold it here. Next thing I know, 2 days later, the stock's at 12. So you really see how aggressive these things are. ZS, another one we had on Friday, ZS, and a whole bunch of these names. EVOP, you can see the big move on EVOP over the last several days. So a lot of really, really big moves. And all this is really demonstrating how strong the stock market is. So for somebody to ask, well, was the market up or down this week? Nobody really cares. Okay, that's the number one thing. Nobody even cares. And well, is the market up this week? Yes. And the market's down this week? Yes. So again, all is contingent upon your individual strategy. Again, it's no such thing as a stock market anymore. It's a market of individual stocks, and that's what we're seeing here. So a lot of the week, you saw good rotation, really, really good rotation. The one question that keeps on popping up was, what's going on with the banks? And again, I get the whole thing, the whole November rally. If you guys remember the whole November rally, let's kind of look in Goldman Sachs. Just use Goldman Sachs as an example. If you look at the Goldman Sachs rally, actually, let's use a weekly chart on this thing, if I could even, yeah. So if you see the whole November rally, you guys remember when the banks just went absolutely nuts in November? It was because the prospects of interest rate hikes, right? Everything's all good. They were going to, charge more money, charge more overnight lending. So that means you and I are paying more for our mortgage, car payments, credit cards, student loans, everything. So everything under the sun, right? That was great. And since then, on the same premise, right, of rising rates, and again, we had another rise this week, they've done absolutely nothing. So what's incredibly impressive about this kind of macro market, right? This really, really macro market is it's without banks. I mean, if you look at all the banks, right? I mean, they really haven't done anything, like absolutely haven't done anything. It's almost like we're in a bear market, we're in a bull market, and nobody's telling this, that, nobody's letting the banks know that they could participate. So it's very, very, it really is indicative of how strong the market is, because we are rallying with arguably the most important group in the market, which is absolutely financial. So kudos to the bulls, kudos to the bulls. So when you look at where we're heading, okay, where we're heading, where we've been, a lot of people believe that the market is slow, right? The market is slow. The market is lethargic. We are seeing some of the most aggressive days, absolutely aggressive days on Fridays. And again, if you've been watching this video, especially our friends on Twitter and YouTube, if you've been watching this video, just on the video, just every single week, you kind of hear me say just for the last 3 weeks that officially, unofficially, the market summer has started. We've had 3 of the most aggressive days in trading beta, okay, in this year. Realistically, in this year, they've been just really, really aggressive. Again, a lot of that is due to the part how strong the FANGs have been, or the beta names have been, and you couple that with option weekly expiration. Expiring on Fridays. So you have all this aggressive speculation money really flowing on Fridays. Even when we saw a down day in the Dow Jones Industrial Average on Friday, right? On Friday, you still saw, really good moves in Tesla, the drop boxes, the Netflixes in the morning, because again, people are not afraid. And when you have a market that there is no fear, right? That there is no fear, despite what the indexes are doing, and a lot of them could be doing a lot of bad things. What we saw on Friday, or just what we saw in the last 3 days of the Dow Jones, nobody seems to care. It's all about speculation. It's all about bidding prices higher, and it's all about FOMO, right? The fear of missing out on the next IQ, the next Pivotal, or the next Netflix, or the next Tesla, whatever the case may be. So really good, aggressive market. So let's talk about Friday's session. So again, sometimes you just don't need to be creative, guys. You just really, really don't need to be creative. And, I put in a bunch of pivots pre-market, right? Pre-market into the private Twitter feed, into our private Facebook page, and obviously during morning strategy. And sometimes you don't need to be creative. Buy the strongest stocks that are shaking off weakness, that are washing out weakness, trapping more shorts. And once they go red to green, usually good things are going to happen. And here's an idea of exactly what we talked about. Here's an idea of what we talked about at pre-market 924. Hey guys, watch Dropbox again. You have two things going on here. You have a potential beta name, and you have a stock that's been very, very strong. And oh, by the way, it's an IPO, right? A recent IPO. So you have the full moon, you have the stars, and everything is aligning. So, if I said for aggressive traders, watch the green to red move. It's not a pivot. Obviously, guys, don't be confused. A red to green trade and a pivot are completely different things. A pivot is a structural balance that momentum will shift, right? Will shift, and it needs to build. It needs to obviously have organic order flow. All red to green or green to red is stocks that were strong the day before, really aggressive buyers, and are getting an opportunity to get in on a closing price as the market has softness in the morning. And all it is a continuation flow. So a lot of people say, well, should we buy this at red to green? Only if there's magnificent strength behind it. If you guys remember Dropbox the previous day, right? Dropbox the previous day, it was incredibly strong, and it broke out, and we had this thing off this 3257 channel the previous day, and here's a stock, and I said, hey, if you watch this thing, if it goes red to green, right? If it goes red to green, you could get a move. And I mean, look what a Dropbox did. All it did at one point was go up about $4. And again, you don't need to be, you don't need to be that, creative. Sometimes just go with the strength and go with the weakness. So in the morning, again, we're not biased. Okay, we're not biased. Tesla again came in 5 minutes before the open. Tesla morning range is 356 built to the upside, 352 built to the downside. Again, here's the Tesla, the 60-minute chart, and there's reasons why these areas of interest are there. So here's your bottom channel, and here's your top of the channel right here, right? 356, 356, 356, 356. You guessed it. Once it broke 356, a rocket went to 364. So big move there as well. Congratulations for all you guys who caught that. And again, same thing. Again, you don't need to be creative. You have option expiration, right? Option expiration on Friday. You have a stock that Netflix has been just incredibly explosive ever since Goldman Sachs has been, not ever since the upgrade of Goldman Sachs early in the week. And again, you don't need to be creative. Guys, watch this. And again, watch this. This is at 10 o'clock. This is the first candle, right? First candle starts at 10 o'clock. Netflix needs a 394 strong build, right? Why do we get the 394? Again, if you look at the 60-minute channel, right? If you look at the 60-minute channel, look at the top of these channels, guys. 93.50, right? 293.50, 293.50, 293.87, 293.91, right? Whole number. So 294 explodes, and look where it stops, guys. Again, if you believe in the theory that stocks go from supply to supply and demand to demand, there's no accident why it stopped where it did at 398.86. Again, that's the top of the supply zone. So good job for all you guys who caught that as well. And then just on and on. And here again, here's another example of an IPO, right? Of an IPO. ZS, another IPO, needs a new base over 42, right? Here's ZS. Here's ZS right over here. Here's ZS right here. The top of this channel, right here. The top of this channel right here was 41.98, right? This is where we get the 42 pivot. Okay, so here's supply. Here's supply. You can see how it stopped here at the linear regression line. And once it broke 42, the stock went to 42.71. Again, not the biggest move in the world, but again, does every single trade need to be a $3, $4 move? No. Again, Derek Jeter didn't go into the Hall of Fame because he had 100 home runs in his career. He went to the Hall of Fame because he had 3,000 singles, and that's the most important point. Not every single trade needs to be this epic event. A lot of times grinding it out, singles, doubles will organically, right? Will organically get you to home runs, and all that eventually will kind of complement itself. And then again, just all down the road, another IPO. Here's another example, right? Another recent example of an IPO just traded over this 2264 highs. If it starts building 23, has a shot to go nuts. Unfortunately, it didn't go nuts, but there was good cash flow. Again, the whole point of it all is, again, keep on keeping on, right? Isn't it that the whole point? Keep on keeping on. So here is the 2264 that I talked about in the private Twitter feed. Here's a 2264. If you look at the 60-minute view, right, it put in a high of 22.99. Why did I say 23? Well, again, next candle confirmed 23, and the stock went to 23.40. So the most important part, again, when you're a trader, guys, number one, if you're a smart person, that helps. Okay, if you're dumb and you are closed-minded to every single process, every single nuance, all the moving parts, and all you listen to is just nonsense and the whole social media thing. Because I'm telling you, social media, and I say this with the utmost, well, I don't even want to use the word, but social media, in my opinion, okay, and I've said this so many numerous times, social media has completely retarded the progress of the new trader. I strongly believe that. There are so many opinions, there are so many opinions that I think people are embracing, especially new traders are embracing, that when you've been trading for a long time, you kind of stand back and look at it and say, what did he say? Is this other person even trading the same market as I am? And it's a big head scratcher. So it's so important, guys, to whatever process you're trading. Again, you could be an options trader, you could trade Forex, options, Forex, E-minis, whatever it is, trading beta, even small caps, okay? Whatever process you decide to trade, okay, do enough homework that you don't need anybody, okay, that you don't need anybody to trade. The greatest thing about these pivots, okay, the absolute greatest thing about these pivots are that if I'm in the room or I'm not in the room, it doesn't make a difference. Once these pivots strike, they're either going to go or they're not going to go, because again, it's organic order flow, that the arbitrage that we identified that nobody trades except us is obvious right in front of you. So the greatest thing about this is you don't need anybody to trade. You don't need anybody to trade, to hold your hand. You think it's going to make a difference if I'm in the trade at Tesla at 350, it goes to 355, whether I'm in it or not? It doesn't make a difference. Once the arbitrage hits and these algos pick up the supply that it's confirming, usually good things that happen. So again, if you're a new trader, get your ducks in a row. Okay, forget about social media. Get your ducks in a row. Whatever process you're trying to, I don't want to use the word master, but at least whatever process you're trying to really embrace, go all in on it. Okay, don't be one of these schmucks that are running from alert service to alert service. It's all about value. Okay, whether you're trading, a penny stock even, or you're trading Amazon, anything in between, embrace the whole process and make sure, hella high water. Okay, you don't need anybody to execute and achieve your goals. So be very, very conscious for that. So let's get into next week. I'll let you guys run, but let's get into next week. Again, look, the NASDAQ 100, the Q's very, very strong. I like the way they held. Again, remember the 5-day moving average that we talked about 15 minutes ago, right? It held the 5-day moving average, so it held market sentiment. So that's very, very important, very, very strong. So going into next week, again, you have to be mildly bullish, no doubt. You have to be bullish. You have to give the bulls the benefit of the doubt. And the most important part is that you have to act accordingly. Like, remember, the markets will definitely change. The markets will definitely shift. However, okay, if you are conscious of a potential reversal, whatever the case may be, you'll be okay. As long as you're not trading with the blinders on, you will be okay. So let's get into some names that I do like for next week, and let's talk about them. Look at Williams-Sonoma. Okay, check out Williams-Sonoma. Beautiful flag, right? Beautiful flag building. You have 1, 2, 3, 4, 5, 6, 7 days of consolidation. It's almost a week and a half. The longer the distribution, the bigger the base. Or you don't believe me, look at QSII that we had from the $18 area, right? The longer the distribution, right? The longer the base, the bigger the move. So look at Williams-Sonoma, big beautiful base here on Williams-Sonoma. Keep an eye on this thing above this 5250 build, beautiful looking chart. INSP, I kind of like this INSP. Again, good distribution, had this big move, recent IPO, 1, 2, 3, 4, 5, 6. Tomorrow will be day 7. You got a whole number break, hot IPO market. Watch the $37 break on INSP. I like that. Keep an eye on this. Wow, I forgot about ZVRA. Look at the move that ZVRA. There's a couple of trades we had in the live webinar. I totally forgot about that. I didn't even discuss them this morning. SVRA off this 1270 off last night's watch list really exploded, and NETE as well. We had this NETE right off this 8.25 area on Friday. Look what it did as well. But I like this SVRA. I think this SVRA goes higher. Keep an eye on SVRA for this week. A build above 1350 could get to 15 bucks. This sector's been really strong. Noodles is another one that triggered on Friday. Again, big long base, confirmation above 1015, 1020. Can get that going. BMRN, it had some good option flow on Friday. It looks like, I think the 100 calls were trading. Watch this thing confirm 99. 99 could give at least a shot at the whole number. So keep an eye on BMRN for consolidation there. And a couple other names. Look at CBay. Coming out of a range here. Just needs to get above this 14, 15 area, this whole area right here. And Surf is another new issue that, very choppy trader, but keep an eye on this thing somewhere around this 15 area. Again, you don't need to look at the 52-week high. You can look for consolidation base right here around the 15 area before everybody starts flocking. So guys, I want to wish everybody again, happy and healthy Father's Day. May God bless you. May God bless your children, the rest of your family. Again, it's very hard to be a great trader, but it's kind of easy to be a great parent. And that's the name of the game. Be a great parent, be a good person, and everything else kind of falls into place. Guys, God bless you. I'll see you all in the field tomorrow.